blockchain technology is practically like, I always, when I talk with friends, it's like a baby. It's growing, it's evolving. But for now, blockchain can give you another alternative, like, for example, give you the access to DeFi, a decentralized finance applications or platform, where you can access to capital without, intermediary from like a banks or different institutions.
Welcome to Acton Line, a podcast from the Acton Institute for the Study of Religion and Liberty. I'm Eric Cohn, executive producer. Blockchain. If you know what that is, it's likely in conjunction with the creation and evolution of cryptocurrencies like Bitcoin. But blockchain's applications have the potential to revolutionize the way people and businesses interact and transact. In this episode, Acton's Chief Operating Officer, Stephen Barrows, talks with Alexander Hernandez Romanowski. Romanowski is a crypto research analyst at Tribal. Formerly a blockchain research analyst at the Mcnair Center for Entrepreneurship at the Baker Institute for Public Policy, Romanowski focuses on how blockchain technology can improve access to capital for small businesses and entrepreneurs. In this conversation, they examine a research report entitled Accelerating Small Business with Blockchain Technology. And Romanowski examines how blockchain technology is evolving, how its adoption is increasing, and what the implications are for decentralized finance and small businesses. You can find additional resources in the show notes for this episode, as well as find previous episodes of Acton Line on our website at acton.org/podcast. And if you like this program, you can help us reach even more listeners by sharing it with a friend and by leaving us a 5-star review on Apple Podcasts. We welcome your comments as well. Acton Line is available on Apple Podcasts, Google Podcasts, Spotify, or wherever you listen.
Greetings, everyone. I'm Stephen Barrows, and I'm the Chief Operating Officer here at the Acton Institute, where our mission is to promote a free and virtuous society characterized by individual liberty and sustained by religious principles. Today, I'm delighted to welcome to our podcast Alexander Hernandez Romanowski, who will be discussing with me a number of things regarding blockchain technology, a subject that I'm interested in, though I find it, quite frankly, quite complex. So let me introduce Alexander. So Alexander comes to us from Mcnair Center for Entrepreneurship and Economic Growth, where he is a research analyst. He focuses on the effects of disruptive technologies on business and market operations, with a special focus on blockchain technology. Hernandez Romanowski holds a master's in global affairs with a concentration in international economic development from Rice University. And just to let you also know that Rice University, this Mcnair Center for Entrepreneurship and Economic Growth, is part of Rice University's Baker Institute for Public Policy. So welcome, Alexander. It's great to have you here with us today on Acton Line.
Thank you, Stephen. I'm very happy to see you again after Acton conference.
Yes, I'm glad you were able to join us. So Acton University, of course, is our signature annual conference, and it's great to be able to have the new people that you get to meet and their various expertise. And frankly, I actually am from Texas, although I've never been to Rice University, but it's such a fabulous institution. And it's great to hear that there's great things going on with the Mcnair Center. So
yeah, you are invited, as I told you. The weather here is a little more hot, but you are welcome.
That's right. Houston is a little bit more hot and humid than Grand Rapids, but you know what? I'll take the sunshine when Grand Rapids gets a little bit dim in the wintertime. So maybe I'll have to schedule something for January.
Perfect. Let's do it. Yeah.
All right. Well, good. You recently published this report, a research report, and the title of it is Accelerating Small Business with Blockchain Technology. And it was a terrific report. Blockchain has been this new innovation. I say new, really, all the way back to 2009. And so why don't we begin? Just tell me a little bit about what do small businesses face? What problem have you identified that blockchain technology could be a solution to? And then we'll get into the details of blockchain technology specifically. So what kind of problems do you see small businesses facing?
Yeah, so one of the things that we found is that, after the COVID-19 pandemic, we saw that there was practically an accelerator to open the doors for a new global system. So one of the trouble was that when the SBA loan from the government, they try to, help a lot of small businesses with credit loans and all of this kind of stuff. But the small businesses face a lot of, bureaucracy there, different kind of steps that they have to fill. And we found that there was a lot of inequality there because, part of that was, the difference of wage with the immigrants, with the African-American population, and all of this population, they practically didn't receive a good amount of loans in comparison with big chains like Shake Shack, different chains that we found. And we saw that there is like a lack of, practically effectiveness. The blockchain has an alternative for those people that they didn't have the access to capital.
It's interesting you bring that up, and when it comes to just access to capital and getting small business loans, it wasn't long ago that I reconnected with an acquaintance of mine from the West Michigan Hispanic Chamber of Commerce, and he effectively said the same thing. You have all these individuals, many of them immigrants, English as a second language. They have these fantastic small businesses, at least in the sense of there's a potential big demand for these individual businesses. So it could be a restaurant that could go big. And yet, when it comes down to it, a lot of these individuals simply have to tap into their savings, or just they can't get the types of access to loans that they might otherwise get because of a lot of bureaucratic paperwork and so forth. It doesn't seem to materialize for them. How could blockchain break through some of that bureaucratic, paperwork and hours spent filling out applications that would help give small businesses better access to their loans to help their entrepreneurial ideas flourish? What could it do?
Yeah, the blockchain hasn't, as you mentioned before, blockchain is practically new. So I see in blockchain technology is practically like, I always, when I talk with friends, it's like a baby. It's growing, it's evolving. But for now, blockchain can give you another alternative, like, for example, give you the access to DeFi, a decentralized finance applications or platform, where you can access to capital without, intermediary from like a banks or different institutions. So one of the things that offer is you don't have to have like a credit history. So, the credit history to build that is difficult for some people. And they have money, they have collateral, they have practically like a good, lands or some kind of assets that they can put as collateral without credit history. So there are platforms like I mentioned on the report. This specifically is like a central application. It's a centralized, but the name is BlockFi. They offer credit loans with crypto loans without, any practically credit history in the requirements, but they evaluate different criterias. Like they have 121 criterias, and that you have to fill. But I know that at some point it's not like the solution of the whole problem, but it's an alternative. And
Sure.
This technology is evolving, so it's a good thing to start researching and knowing more about that.
So let me see if I can back up a little bit, because I myself have found it to be pretty complex, and I'm sure that some of our listeners know varying degrees about blockchain and what it does. And I'm going to summarize for you how I perceive it, and then feel free to respond or add to it. So when I think of blockchain technology, one of the cruxes of it is its decentralized nature, so that there's no centralized third party validating whether or not transactions are legitimate. Okay, so this decentralized is the first thing. And the second thing is it effectively enables trust. Am I on to something here, or is there missing something?
Yeah, you got in the point when you mentioned the trust is very important, because if you see the essence of the blockchain technology, imagine us, we as a human, we have a unique fingerprint. So I'm seeing blockchain like that in the transaction world. Every transaction is a unique, and you cannot duplicate. You cannot clonate and anything like that. So that is a main thing for blockchain technology. And that is one of the big attributes for that.
So if I'm an individual who wants to get a loan, and ordinarily I have to fill out all sorts of paperwork, and a small business, takes hours and hours of their time. Sometimes the forms maybe are even not comprehensible. And so you submit all of this, and then it goes to a bank who then does their due diligence, right? So the due diligence piece, it seems like to a certain extent, there would still need to be some due diligence going on unless there are other criteria that you use that could be instantly validated on the blockchain. So are there some examples where entrepreneurs involved in blockchain technology and various applications have created opportunities for businesses to be able to have their information immediately validated?
Yes. So I didn't add all of the options that we have found on this report, but one of them is BlockFi. BlockFi is very cool. It's a centralized, but if we want to look for more decentralized application around the world, there is three main that I have been finding is very helpful to see another alternative. If you are an entrepreneur or a small business owner, you can apply for loans right now with different criteria. Instead, the usual criteria that we already talked. One of them is Goldfinch, and I can send it to you all of the information. And then Steven. In Goldfinch, what they do is that they open you the way to lend money in a decentralized application without any requirement of, for example, credit history, but they do require, for example, one asset. See, if you have a home or something like that, you can put that as a collateral. But the difference of the current system is that you don't have to prove any credit history and any credit score. So it's a good alternative as well. And they don't require a credit collateral with the cryptocurrencies, because other ones like a BlockFi, they require a crypto collateral. For example, if you want to get $10,000 in cash, you have to put at least one Ethereum. So, I know everybody has Ethereum, or know everybody has for now, So as I mentioned before, I've seen that this is this technology and all of the application are evolving. And every time through the time, we are seeing that they are bringing us more different options to apply. So the adoption is increasing, and we are pretty optimistic that this is going to keep improving itself.
Sure. So let me ask you as a follow-on, I've heard the phrase decentralized applications. And are these examples of decentralized applications where you have the blockchain, but then you have sort of an interface to the blockchain that enables people to apply for a loan or to provide information that is then attached to the blockchain?
Yes.
And what does that mean to say it's attached to the blockchain? What do we mean by blockchain itself?
So what do you mean asking about the blockchain itself attaching with the platform? Because all of this platform is moving with a blockchain and DeFi, decentralized, finances. But I want to know more about exactly what you mentioned now.
Yes. So in my mind, and then for the listeners who may not be familiar with how the technology works, as I understand, when we had Bitcoin itself is the premier example in the original blockchain technology, where you have a ledger that's actually out there that shows a whole history of all the transactions and engagements that are occurring. And because it's distributed, which is the network itself, anybody can tap into that network and verify that the transactions have actually occurred, as opposed to a third party validating it. And so the blockchain, if somebody engages the blockchain itself, as I understand it, the technology is such that you do not need a central third party to validate. The hashes that engage as somebody does a transaction, that the new hash would actually confirm and validate almost instantaneously that this has actually transpired.
Yeah, that is completely correct. And that is the great things of blockchain. You don't need a bank, you don't need intermediary to approve any transactions. You can do P2P, is person-to-person transaction, where there is some intermediary even, but if you want to use an exchange, for example, Coinbase, Binance, KuCoin, if you want to use them, they are practically intermediary, but not like a bank. They just require like a small fees, is the pen of each platform. But what you do with that is that you can get more secure in to do faster your transactions. But even if you don't want an exchange, and you, Steven, and me, if we want to trade like a Bitcoin or whatever, we can do it in the crypto space without any platform, just with internet. And that is the one of the advantage of the technology.
And it seems to me that if it's not, there's no centralized mechanism, it ensures that you aren't ever canceled, or it would also ensure that you don't have a single third party that could hold you hostage, as it were, which I've heard situations where that had actually transpired. So it's good to have it decentralized in that way. Now, I'm going to rapidly get outside of my area of expertise, but I understand that there are two different mechanisms, one proof of stake and the other proof of work. Proof of work oftentimes being very energy intensive, takes a lot of time to validate the transaction, and proof of stake being a bit different. But I understand that the technology is evolving so quickly that there are other decentralized mechanisms that have very, very rapid transaction finality, as it were, confirming that the transaction is valid. Am I correct on this?
Yeah, is that correct? Like, for example, there is another ones, having got it some troubles. The name is Solana, but they have more, faster transaction in comparison with Ethereum. But some interesting about the network of Ethereum is that Ethereum is almost, is close to get a merge. They're going to pass from proof of work to proof of stake. So the proof of stake, as you mentioned, is going to help to decrease the consumption of energy. It's going to help to, do the transactions with less fees. But, we are in a transition. So that's going to take a little time for Ethereum. But Ethereum now is the main network of all of the smart contracts and more trustful. There is another network, but when you want faster, you want to make faster things, of course, the risk is going to increase as well. So there is some traders that they are using faster networks, but you have to be careful researching very good, knowing about each network, because something that happened recently with the fall of Terra Luna, that was a network and they fall very deep. And so that is something that is happening right now with the crypto winter. It's practically cleaning the landscape of all of the, projects that they are unsustainable. So it depends of which perspective I will see, but of course, I'm seeing the positive perspective.
For sure. I mean, I think you're right. What little I've learned about the technology itself, it does sound to me to be transformational. On the one hand, you could harken back to those who remember the dot-com bubble, where there was a period of time where a number of startups in the dot-com era went out of business. They just didn't have enough substance behind them to be a viable business for the long term. But the internet and the web and dot-com industry remains, right? I mean, and so we're sort of seeing a purge, I suppose, at this point, of those that are viable projects going forward and those that aren't. So, you talked, and we started to begin talking about loans for small businesses. And yet in your paper, you also point out that there are other kinds of applications that distributed ledger technology and the blockchain can use or can be applied to in business. And one example I found fascinating was the idea of, say, Walmart tracing, say they find out that there's E. coli in some supply of food that they're distributing, and they've got to find out the source of which farm or which ranch has the infected meat or vegetables. So what could blockchain do to make that more effective?
Yeah, so if you see the problem that happened, usually when you don't have the control exactly of each, for example, the origin of a product until get to the store, you have to put a lot of, people controlling that. You have to create different departments. And it's, that's require more cost when you want to, sell your product, if you want to trace with the usual, mechanisms. But with blockchain nowadays that you have less intermediaries and more control, it's more clean without any, kind of different protocols. You can trace your product. And also, if you synchronize, I don't mention in our paper, but to go a little deep, if you synchronize blockchain with IoT, you can trace even with the temperature your products. So there are some different chains, like, for example, I was reading about one of them. There is with the solar panel, the renewable energy. So they want to trace the solar panels because they want to know when one of those solar panels is bad, they have to replace it. So they synchronize blockchain with IoT and they put a sensor of the temperature. So, blockchain can solve that problem quickly without having a person paying the person knowing when, the solar panel is bad.
Remind me, what is IoT?
So IoT is the Internet of Things.
Got it.
Yeah. The internet, for example, imagine if you are in your home and you can create your home with all of the stuff smart. For example, your bed can know with IoT what is the temperature that you are sleeping in your bed, something like that.
Yes. Yeah. Well, that makes a lot of sense. When you said temperature, it immediately brought to mind an example that I had heard when they were first coming out with, COVID vaccines. There were certain criteria for making sure that the vaccines themselves were always transported from facility to facility within a certain temperature range. And you can actually attach that to the blockchain and validate that throughout its entire logistics process, you have confirmed with certainty that those vaccines in that batch had remained within the required temperature range, which is pretty fascinating to me.
Yes, me too. I saw that example and, can solve a lot of problems. And if you see, as I mentioned at the beginning of the interview, after the COVID-19, all of these technologies have been bringing more and more solutions because, the necessity is the mother of the invention. So I think that we are doing well with that.
Absolutely. Let me ask you another example of see if this would be possible. I get concerned sometimes that you have what they call deep fake video, right? It's not really what happened, but they made enough subtle changes to the video or to the original photograph to make it appear as if something happened that didn't actually happen. Do you think blockchain could be used to validate that an original photograph or original video is in fact the original?
I think at some point, I haven't seen any example now, but I think for sure that can help you to validate that. But where the problem, one of the main things that China has been facing, some of the, the other perspective when they are a little pessimistic about blockchain, they say that because blockchain is publicly working in China can be a problem as well of your privacy. But so that's why there are different, evolving of the blockchain in different countries. For example, here in the United States, we are more focusing on mining cryptocurrencies, on more diversity of cryptocurrency. But in China, there is more centralized. China ban the crypto mining and they develop the digital yuan on blockchain. So what China is trying to do is centralize more the blockchain with a blockchain government, and the United States is trying to keep the freedom of market with, blockchain. So it depends on how do you create the blockchain and how do you manage blockchain in that part. So what I'm thinking of deep fake with all of these platforms like a TikTok, that is happening right now with the deep fake. So it depends on each administration of the government, how they're going to manage that situation. But for sure, I think that we can do it as the United States with the regulation. Yes.
Well, I've heard the same thing, that you have this trade-off between security and privacy. So on the one hand, and I've talked about this in a lecture on digital currencies. Digital currencies, on the one hand, you want to make sure people can have the kinds of privacy that they use cash for. You don't want everybody to know every transaction you've ever made in your life, right? Although, in principle, if you're on the internet and you're purchasing things, somebody can probably find out who purchased what, where, when, and why, right? But nevertheless, when in the hands of of either a nefarious private or state actor, we want to create a situation where people have both the privacy that we would expect in society, while at the same time preventing things like money laundering, terrorism financing, and all the other sorts of things that the banking system is required to monitor to make sure that there aren't those bad actors in the marketplace, as it were.
Yes, for sure. I was listening the interview of the CEO of Cardano recently about the regulation, and he said something that is true. Blockchain is the most transparent in the transactions because we are public. So I think that more than what can we regulate, we have to talk and how can we expand the adoption. In the meantime, we can improve with the volume. But as I mentioned in my paper, we have to be careful to balance the regulation and the innovation. Because if we regulate too much, Steven, we can close the innovation here in the United States in comparison with other countries. So we don't want that. We want to be on the top of the innovation.
Absolutely. And, this is where you brought up the banning of Bitcoin mining in China, right? Just completely banning cryptocurrencies would be the extreme situation. Of course, they want the control. And here in the United States, at least I think that we've got to find that happy medium where we provide sufficient rules of the road, right, to make sure that the innovation can flourish without suppressing it, right? So let me ask you, I've got to ask this question, since we see that the crypto market value has plunged. It was close to $3 trillion, I think, at one point in 2021, and now it's lost 60% of its value or something. Some people are now saying, see, it's a bubble. It's just a bubble. It's tulip mania. This is all just a fad to begin with. Do you buy that, or what would you say to the person that says, yeah, it's all a fad?
Well, the first thing, I'm a trader as well. So I'm in the trader communities, and, I sometimes I'm laughing in the essence of, the same people that always criticize in the moment when the market is down is the same people that always is very happy with the market is up. So, right. Yeah. So one of the things that I practically seen is there's not only the crypto market is down, is the stock market, is the commodities, everything is down. So if we see this like a cycle, this happened before, but if you see the macro level of Bitcoin is like a stairs, is up. So we are in a good moment in the meantime where the people is saying that this is like a bubble. Three main whales are buying more Bitcoin. El Salvador recently bought more than 80 Bitcoin. MicroStrategy with Michael Saylor, they bought more Bitcoins. JP Morgan invests at some point in Bitcoin. When it is funny because when JP Morgan was giving a press record, for the people saying that they don't believe on too much in Bitcoin, at the same time they bought Bitcoin. They made a transaction. So we have to be careful on the media. The media sometimes is trying to convince you of something. But if you do your good research, your deep research, you can find that this technology is growing and the adoption is increasing, and it's going to keep evolving like a baby. The baby is going to fall, everything, but it's going to keep growing.
That's right. Well, I agree with you with the broader market observation. I mean, we're seeing obviously the U.S. stock market is struggling. It's down, was in bear territory for a while. And I think people are looking at the economic horizon and saying it's clear that inflation is going to be a problem. The Federal Reserve is going to raise interest rates. Capital is going to be more difficult to come by. And what happens as a result is the weakest firms or the weakest ideas end up losing. And we're starting to probably see the beginnings of the shakeout of which projects are viable in the long term and which ones are not. So, I think when your paper points out is that the individual businesses do have opportunities and options to get assistance for implementing blockchain. And what would you say to those who are listeners who are intrigued? Maybe they own a small business. They want to know, well, how can this be practically helpful for me? Where would I go to find out more?
Yeah. So one of the things very interesting is that, well, there is two options for at least for a small business. And one of the things, Stephen, is that when I create this paper is because I put myself like entrepreneurs and I say, well, if I'm going to create a business, I want to accept crypto payments as well. I want to save some Bitcoin. So one of the options for small businesses they are implementing now is that they accept crypto payments. So they say, okay, you can pay me with Bitcoin, Ethereum, with through a platform that the name is BitPay. But the people say, wow, but why they accept crypto if crypto is very down right now? Well, the people that are accepting crypto payments, most of them, they are saving those, diversifying their, profit. And they are saying, okay, I'm going to save my Bitcoin for the future. So there is another alternative, but for sure, they are not like only accepting crypto payments. So as example, we found one very interesting application. The name is Menufy, where they work with a lot of restaurants around the United States. So they work with delivery, and in their platform in internet, they accept crypto payments. So you can pay with dollar, with Bitcoin, with whatever you want, and they accept those crypto payments. So that is an option, very cool, where if you own a restaurant or if you own a store of shoes or whatever, you can get an alliances with this kind of platform and say, well, if I wanna get delivery or wanna give delivery for my customers, I can get this alliance and start accepting crypto payments. And most of the entrepreneurs, they are very happy to having these options because they want actually accept Bitcoin because the inflation. The dollar is decreasing their value and they know that Bitcoin is going to jump at some moment and they're going to at least make some profit of that.
And the algorithm itself ensures that Bitcoin will not exceed a certain supply. Well, I forgot the total number of Bitcoins the algorithm limits it to. What, 21 million? Is that right?
21 million, exactly. And we are now in 19. So each 4 years, it's going to be more difficult to mine a Bitcoin. And that is another, very good positive things about Bitcoin, that in comparison with the gold right now, Bitcoin has a maximum supply. So it's an asset that, you can trade globally, and that is a positive thing, yeah.
So I've heard the phrase Web 1, which was basically the original internet as it really came on board in the mid-90s, and then Web 2 with the addition of social media and individuals creating content distributed across the internet. Now some people are saying that this blockchain technology, distributed ledger technology, is creating Web 3.
Yes.
What do you think about that? Is Web 3, is this where we're headed?
Yeah, so Web 3, how with the metaverse, I'm pretty sure that you have heard about metaverse, but yeah, actually, I have some friends that they own some lands in the metaverse, and they are making like events or things like that. We are going to a virtual reality. I don't think that it's gonna be like everybody's gonna be in the virtual reality. Of course, we are dual, but for sure we are going to get more people in the virtual reality. So, which means that all of the, for example, NFTs that are non-fungible tokens or things like you can create on the Web3, you can sell in the metaverse. So I believe that the Web3 is developing now. Recently, Meta, the old Facebook, they invest and they are developing a very huge metaverse ecosystem. So in contrast, talking about the many things that was this is one of the reflection that I got from the Acton conference, is that there is some fear from people. Well, I am in the faith, and I was saying, well, if we are going to the virtual reality, everybody, we're gonna be like in a matrix, and I don't want to be connected. Right. I want to live the reality, but at some point, I believe that this is gonna be like Matrix for now, I don't see that. I am seeing that we are in a process of evolving. And we as a Christian, we have to be in those places to influence the regulation. Because if not, we're going to leave those spaces for people that, we don't know. We have to take care of what is happening instead of having fear, going there and do great things.
Absolutely. We can't retreat from new technology. We have to inform the new technology with faith and the virtue that Acton Institute really emphasizes here. We want to make sure that we have markets with morality. And certainly this is a technology that's not going to go away. We certainly don't know where it's going to head entirely, but I'm convinced, based on what I've read, that to the extent that it enables trust on the internet, to the extent that it enables us to avoid the necessity of a third-party centralized validator or verifier, this whole new distributed ledger technology has enormous potential for our future. So with that, I want to commend to you again, to the listeners, the research article published, Accelerating Small Business with Blockchain Technology. That was researched and published by Alexander Hernandez Romanowski, our guest today, through Rice University's Baker Institute for Public Policy. Alexander, thanks so much for joining us today.
Thank you so much, Stephen. It's my pleasure. And as always, we're going to keep in touch.
Yes, absolutely. And thank you, listeners, for joining this episode of Acton Line.
As always, thank you for listening. Our team loves putting this podcast together for you. It's encouraging to hear from our listeners. Feedback is incredibly important to us because it lets us know what you'd like to hear more of, including the kinds of topics you're interested in most. If you have comments, feedback, or ideas for a show topic or interesting guest, you can email our team at producer@acton.org. Until next week, for Acton Line, I'm Eric Cohn.